Hi guys, good evening and welcome to Money Control. I'm Karunya Rao and I'm here to help you understand better the fine print of HUL's numbers for the quarter gone by and to decode that numbers, the performance, management commentary. I have with me Sanjay Manyal from ICICI Securities to help us understand all that and more. Sanjay, thank you so much for taking time out.
Thank you for inviting me.
Before we begin, I want to quickly read out the headline numbers for December quarter, which is Q3 FY23. The standalone net profit for Hindustan Unilever increased by 12%, coming in at 2,500 odd crores. They reported a net profit of 2,243 crores in the year ago period. So it's a healthy 12% growth. Their revenue from operations came in at 15,228 crores, up 16% YOY. The numbers beat estimate according to a poll of brokerages that we did here at Moneycontrol. Standalone revenue was expected around 4,900, so there's a beat in that. Profit after tax as well, we had expected to come in lower, around 2,400. So a mild beat as far as the consensus expectation of the street is concerned. Volume growth, underlying volume growth of 5% in the quarter, again in line with street expectation of 4 to 5%. Now, Sanjay, talk to us about what were your big takeaways. While yes, they did manage to give healthy double-digit YOY growth in both top and bottom line, do you think the profitability, the margins, they were encouraging as well, or are you a little bit disappointed on that front?
No, I think it was pretty much clear during the last quarter's commentary that margins will only improve sequentially, and year-on-year basis we'll still see a contraction, a kind of a contraction. We have seen almost 470 odd basis point gross margin contraction this quarter, and though there has been a sequential improvement of somewhere around 180 basis point, but if you see the last 1 year's inflation was so high that it will only gradually improve. The margins will only gradually improve. We have seen palm oil prices came off from June onwards. We have started seeing crude oil prices have started declining from this quarter onwards, and both these factors will reflect over the period of time. Though, if as management has also mentioned, that if the commodity prices remain where it is as of now, then probably we'll see a gradual improvement in the margin territory. As far as volume growth is concerned, 5% is pretty much what we were estimating, at ICICI Direct. And given the fact that last 3 years have seen both COVID disruption as well as the inflation fury. So the kind of volume growth we are witnessing is still much lower than what it has done historically. If we see last 3 years CAGR, volume growth would be in a low single digit only. Uh, but as and when the prices start declining, prices start, companies start passing on the benefit of raw material prices, I think the rural demand will come, and maybe in FY24 we are expecting volumes uptake. Volumes growth will come back for the FMCG companies.
In fact, they did say that they're seeing better demand in the rural market compared to urban markets. They also said that material inflation has come down to 8%. Value growth has moved up to 8% in December quarter. And in fact, they've taken price decreases in soaps and tea portfolio. While that is good news for us consumers, do you think profitability can be maintained in the quarters to come and they will see meaningful effect of decrease in input cost prices?
So yes, so I think the price cuts have come specifically in the soap segments, because palm oil prices, as I told you, started declining, started coming off from June onwards, and those prices have for the company level have incorporated in October and then onwards. So price cuts have come in two ways, I believe. One is the the grammage restoration in the smaller packs. and the other is the actual price cuts which company has taken in soap segment. So I think rural demand specifically, which is driven by the lower SKUs, will improve mainly through the grammage restoration or the grammage increase. As far as detergent is concerned, I think detergent is a category where we have seen both pricing growth, because crude, as I told you, have started cooling down only in this quarter. So I think the price cuts probably in detergent part, or the product portfolio, which is largely driven by crude based derivatives, will only coming in the future quarters. I think detergent has also got the benefit of the higher mobility. So in the base quarter, though the COVID disruption was largely over, but still mobility was very low. And I think that benefit is still incurring in all those categories where the mobility has impacted the demand, whether it is detergent, in foods part, ketchup, and jams have done well, and that's largely to do with the mobility. Schools have started in last schools were not fully functional in the base quarter. So all those benefits have probably incurred during the quarter, and will reflect in the future quarters as well.
Another interesting update out of today's final trading was the fact that HUL changed its royalty arrangement with its parent company Unilever. And remember that this, last time the royalty increase happened was back in 2013. So after a 10-year period, they're again looking at a revision. The royalty increase from 2.65% of sales to 3.45% in staggered manner will happen over 3 years. So there'll be a 45 bips increase in 2023, 25 bips increase in 2024, and another 10 basis points in 2025. Help us understand what exactly could be, if at all, any impact of this company's full financial report card, because investors are more interested in knowing how this could impact them and their shareholding.
No, so it's pretty much simple. As you mentioned, it is a 0.4% odd percent, so that will directly impact the operating margin. But I think, given the fact it is in a staggered manner, and given the fact that it is at a time where we are going to witness the the gross margin territory going up, I think the absorption of the royalty of 0.8%, which is not very high number, and that too in a staggered manner of in a 3 years period, will be very challenging for the company. I don't think it will have any material negative impact on the profitability front, given the fact that we are in a period where we will see a gross margin expansion over the period of next few quarters, and at least next 3 to 4 quarters.
So the worst of the phase that FMCG pack was going through, you think that's behind now, and in the coming few quarters we can expect things to look up?
Yes, we can expect. I think we can expect, specifically for a company like for a big company like HUL, we can expect higher volume growth, and we can expect a margin improvement going forward. Given the fact that the most of the commodity prices are on a downward trends only now.
So does this sort of set the tone for other FMCG giants as well, which will be handing in their report cards over the next couple of weeks? Should we expect a similar momentum pickup in their report card as well?
So yes, I think initially, if you'll see, most of the companies which are where the benefit of the crude and the palm, or the imported commodity, the portion or contribution is much higher in their raw material basket. I think they will benefit initially, and I think in next maybe in FY24, we'll see all those commodities which have been witnessing the food inflation as well. I think food inflation will also start cooling off in FY24, given the fact that we are likely to have a higher wheat crop in next season. Most likely milk prices also will start cooling off. So I think all the companies which are a higher contribution of the foods portfolio will start benefiting from FY24 onwards.
Okay, that's interesting to note. Do you guys have any sense on valuations as well? The FMCG sector went through quite a bit of a turmoil last year. But of course, we've seen a good rebound coming by for most of these companies. FMCG index in itself has seen good resurgence. So, any word on valuations, and is now a good time to start once again, taking a fresh look at fresh investments in FMCG and consumer space?
So consumer space, I think we can look at it in a two-way. So big companies like HUL, which has seen a consistent margin improvement over the last 10 years, will command a higher or will command a premium multiples. But many of those companies which will not be able to, or where many of these categories where the competition is high, then we can expect probably some contraction in the valuation multiples. But I think all those categories where the leader is very much defined, it is very much challenge means it is very much difficult to challenge the leader. Those categories, those companies will continue to command the premium multiples. We have seen on an average, all these FMCG companies are trading at 50 odd times price to earning multiple. No, I think, as I told you, the bigger ones like HUL will still continue to command that multiple.
Okay, great. And on that note, we'll wrap up the chat. Thank you so much, Sanjay, for joining us once again and decoding the performance for us, and also laying out our expectations right for the other companies that are yet to come out with their numbers. Thanks once again.
Thank you very much.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions, and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.